All right, all right, all right. Welcome back, 360 in the house. And we got yet another incredible chapter for you in the 360 Elite Trading course, baby. It is time to talk about buying support. Doesn't that just sound easy? Buy support. I mean, that sounds like that should be it, right? It sounds so easy on paper. Buy low, sell high. But why are so few people actually good at it? Well, we're going to get into that today. I'm so excited. I'm glad you're here. Let's get this party started right now. Buying support. Let's do it. Basically, we're going to be putting together. You've gotten a lot of stuff under your belt, and hopefully you're enjoying the material. Hopefully you've actually watched them more than once. This is something that requires practice, practice, practice. And you've got to be a great trader. It's like being a finely tuned instrument. You know, you can sit down on a piano that ain't been touched in ages, and you can hit every key perfectly, and it sounds like garbage because it's not tuned up, man. You know, you're out of sync, out of tune. You know, you could be an excellent baseball player, and if you don't play for a year, you go out there and you try to play. You know, you're gonna make dumb mistakes, do stupid things. Things ain't gonna feel right. You're gonna be sore the next day. It's just gonna be a mess. Why? Because you're not in sync. You're not in tune. Trading is no different. You gotta get plugged in, and then you gotta stay plugged in. It's like let me put it to you this way, man. Back in the early '90s, I used to design websites. Yeah, HTML. I could do it. I did that for a long time. And then I stopped and other things. I got into trading and a bunch of other things, and had other businesses, so on and so forth. So I stopped. Well, when I went back to look to see if I could do it again, I was like, "Oh my goodness, this is not even the same thing." People ain't even using HTML. Like, it's just weird. It would take me forever to relearn, and I mean, the technology is just way past me. It's just not the same. So for trading and for cryptocurrency and for the way things evolve, especially crypto, that is constantly evolving, constantly moving, constantly changing as the days go by, you've got to stay plugged in, man. This isn't something you can just put down, pick up at leisure, and it's just not the case. Now, that doesn't mean I'm not talking about the difference between a day trader, a scalper, and a swing trader. Of course, there's different times and energies for different trading levels. We're not talking about that. I'm talking about overall, man, the big picture. You know, you walk away from this and you know, you kind of lose that tuned in feeling. So, you know, that's something I want you to keep in mind as you're taking this course. You know, the more plugged in you stay, the more you keep at it, man, the better you're going to get at it, the more finely tuned in, and the more elite you're going to become at trading. And that means being okay with making mistakes, taking losses when you have them, so on and so forth. So, buying support, let's do it. What is support? By now, you should know that support is basically the same thing as a demand level. When you understand support, to understand resistance and understand support, it's basically to understand buying and selling. So when I say support, that means there's demand there, and this is basically what it says right here. It's an area where you can generally expect there to be more buying interest than selling. More people interested in actually buying at that price than are selling. And because there's more people buying at that price than that are selling, what happens to the price? It causes that bounce off of that demand level. There's demand there because the price is lower, and there's an expectation of a higher price point. So because of that, you get that bounce off of support. That's all it is that simple. And then, of course, supply would be resistance. Resistance would mean there is supply there. That means there's plenty of people willing to sell at that point of resistance. And that creates what? When there's more people willing to sell than are willing to buy, then you have a drop or a reduction in price. Man, that's all support and resistance is. So when you see my charts and you see, especially Bitcoin, or when there's a lot of ranging going on or consolidation, I use many horizontal price action lines because I want to see that battle between support and resistance, that battle between demand and supply. That is why those lines are there. And by seeing that and seeing volume and putting that into practice and putting that into play, I'm then able to tell who is winning the battles, which eventually tells me who's winning the war. War being the overall trend. Battles being the price action in between and amongst that war. So awesome. So that is what support is. I know, there it is. Buy low so you can sell high. You've all heard it. Everybody's heard it. It sounds so good on paper. The name of the game, the way you make money, is to buy low, sell high. If it's that easy, then why isn't everybody doing it? Well, because it's obviously not that easy. Because once you put psychology in there and all the mental stuff that I've already taught you, and all the other things, and all the greed, and all the fear, and you add that, then buy low, sell high goes out the window. And you start to look away from your actual stratagem, your actual trading theology, your trading system, and you start to do goofy stuff. And you start to make horrible decisions. Some of the best trades come from just basically buying support in terms of your profit potential. Now, we've already done some pattern stuff, man. We've already talked about wedges. We've talked about triangles. We've talked about pennants. We talked about flags. But you know what? Honestly, and a lot of those involve support and resistance, and they make up these patterns. But honestly, you can trade based off of just support, literally. And what kind of supports do we already know about? Well, we already know about our horizontal line supports, for price action. We already know about trend lines. We should know about trend lines, which can act as support. And we haven't really gone into it in depth, but moving average is basically the same thing. A moving average can identify an area as support or resistance. So all of these can act as price action indicators and give you a level or an area. Remember, it's an area of support. There is no line that is a precise point. They're all areas. Even though it looks precise on the map, even though it looks precise on the chart, all lines, whether it's a moving average, whether it's a trend line, whether it's a horizontal line, it's an area. It's an area. All right. General rules. Okay. When you buy support, in general, we like to trade in the direction of the trend, not against. There are people who do trade against the trend and short at different resistance points, but these are literally experts at what they do. I do not recommend this. I recommend you stay for the highest potential of probability of success. Stay trading in the direction of the trend. So if you know you're in a bull market or a bull cycle or you're in an uptrend, then you want to be buying support. You want to be buying that trend, not on its rallies, not on its peaks, but on its pullbacks, on its dips. And that is how you trade in the direction of the trend. We don't want to trade against it. So if there's an uptrend on an item we're interested in, we're not really looking to short, man. I mean, we're just not. That's trading against the trend. If you're in a downtrend, even if it's a temporary downtrend, but there is definitely a downtrend, it's not really a great idea to go long until you get a reversal or there's a sign of a reversal. Buying support in a downtrend is a fool's game and extremely high risk. There are people who do it. And a lot of people who do this, it's called bottom fishing. You're trying to buy the bottom. Now, remember, we're not talking about holding right now. We're talking about trading. This is a trading course, so we're not really talking about the hold game. That's completely different. That falls It still follows some of the same rules, but there's some differences. Here, if you're buying support in a downtrend, the risk is against you. The odds are stacked against you. Your probability of winning is slim to none, very low. And then if an uptrend, you're buying support or demand, then that is where you want to be. So in an uptrend, you want to be buying support where the demand is. Remember, you've heard it on Twitter all the time. Don't buy a shooting rock. Don't buy a shooting star. Don't buy a rocket. That's FOMOing in. So we allow our strategy to set up these patterns, set up supports, and that's where we make our entry. That's where we make our entry. And then in a downtrend, you would be selling resistance. So in a downtrend, when you get those bounces in a downtrend into resistance, and that's where you would want to sell and take advantage of shorting if you are a shorter or you want to go short. That's some general rules. Go with the trend. Trade in the direction of the trend. So how does it work? It's very simple. When you buy support, you're basically entering a pullback. Remember, the trend is up. So you're entering a pullback that has weak volume or weaker volume during an uptrend. You don't want that volume to be insane, because if the volume is strong, then you might be picking it up at the wrong time, or you might be getting in too early, or could even be a potential that the trend is reversing. So you want to, when you get those pullbacks, you want to be looking at the pullback volume, and we prefer to see the dip or a dip volume. Now remember, make sure you're reading candles that have lower wicks correctly. Make sure you're counting those wicks as some buying in there. So just because you have a large red volume bar at the bottom doesn't mean it's necessarily all selling. You have to look at the candle as a whole to see the price action. Is there a nice long lower wick? Well, that means there were buyers there. So make sure you're using all the lessons I've already taught you, and you're putting them together. So we've already discussed this, but your pullback entry area is easily identified by all the stuff you've already learned. Price action, horizontal support lines, old resistance areas that we broke through on the uptrend that are now what? Old resistance becomes new support many, many times. Or how about those trend lines? Beautiful support areas. And then moving averages, we really haven't taught an actual class on moving averages, but moving averages work the same way. Now, or a combination of the above, and I want you to focus on that. Combination of the above. Why? Well, because it's more powerful. The more of your indicators that come into line and into agreement, the better odds you have of that support working out, or that support holding up, or of things going the way that you want them to go, man. You want a meet and greet of the indicators, as many as possible. And that just puts the odds more in your favor. I love that stuff. And we're going to look at that in a minute on charts, but let's continue on. So let's continue on with how does it work. I just told you this. The more lines or levels you have, the better chance you have, the more reliable the signal, the more solid that support's going to be. If my uptrend line aligns with the horizontal price action support line, boom. Now, what if that trend line aligns with a horizontal price action support that aligns with the moving average? Whoa, we got a trifecta of support. I mean, hello. Fantastic. It doesn't always work that way, and you don't always get it that easy. But it's just something to keep in mind. So when you're charting and you get more than one thing, when our indicators are all clapping hands, well, we clap our hands with it. It's awesome. Here's an example. Price pulls back on weak volume. Yes, weak volume. Uptrend, the volume's nice. Now, volume's nice. It's a solid uptrend. And then, boom, we get in this little dip, this little pullback. But, hey, the volume's not there. Sellers aren't really showing up. And now, all of a sudden, we got price hitting a horizontal price action line. That's also touching that uptrend line. And, boom, there's a 15-day moving average. What? How to enter. So I've got these lines. That's great. 360. That's great. How do I enter? Oh, the slide's kind of off the screen a little bit. Sorry about that. Well, there's several ways you can do it, and it depends on your risk tolerance and what you're willing to go through and experience. Everyone's different. However, for the highest probability of success, instead of buying it at that line while it's dipping, you wait for that reversal candle. And many times that reversal candle could be a bullish engulfing candle on volume, or just get that green bounce with the higher volume. Why? Because all you're doing is you're letting the chart or the price give you confirmation. See? So you're letting you see it hitting the line. You see it's on support, and you're like, boom, it's on support. Well, okay, hold your horses. Let's wait. Let's get some confirmation. You don't FOMO. You don't have to rush. You don't have to go crazy. You don't have to pull your hair out. You don't have to have the fear that you're missing something. Let the chart speak more. Let more cards be played out. Let the market show its hand. And now, all of a sudden, boom, you get a bullish engulfing, or you get that solid lower wick bounce. And you get some volume on there, and you see buyers stepping back in. Now you have some confirmation, and now you can go ahead and enter. Still low, you're still in the dip, and you can go ahead and enter that bad boy. The other way, the highest risk, but it does carry a higher potential profit gain in percentage, is to buy it at support. It's higher risk, and you got to be careful because you are closer to getting stopped out than if you waited for that reversal confirmation. But if you're right, well, you got in really low. Scalpers do this a lot. Because they're also looking for less on the bounce. They're also looking for less of a percentage gain on the bounce. So you could just have to make decisions on what kind of trader you are and what your risk tolerance is. Boom. Using stops, nothing changes here. So if you're buying support, that means you have structure. You have market structure. Whether an old resistance level is now becoming a new support, whether you have the trend line structure or moving average structure, or you have a combination, that is structure. Placing your stop at the structure is dumb. Because many times you'll get a breakthrough there or a breakout move and it's false, and it'll come back and retest that structure. Or the bounce is there, but it could level out there, go sideways for a little bit, and continue to nick that support before taking off or before heading higher. And if you just place your stop at the support structure, then odds are very good that you're going to get taken out of the game long before you have a chance to succeed. So you want to give it some room, some cushion room, and pay attention to the wicks on these candles as well. We talked about those stop-seeking wicks, man. Know where those are at, if there's any there. Or is this an item that it has a habit of having those? Not all alts have them all the time. Some have them all the time. And some have wicky candles nonstop. So that's what I mean by being plugged in. Being familiar with what you're actually trading. This is why so many traders have a basket of a select few and they trade the same ones over and over and over. For that reason. Because you become familiar with what you're trading. You become plugged in. You become in tune. You get a sense of how buying and selling works and volume works, and you get a sense of that and what it's used to. When it does run, what percentage does it normally run? Is it capable of a 60% run? No, normally when this goes, it's only 30%. Well, knowing those things help you identify many things, targets, entries, all of that stuff. It's called being plugged in. See, it's not as simple as buy low, sell high. It just isn't. There's a lot more to it. All right, well, that's it for that. So let's go pull up some charts and take a peek and see what we're going to do. So I'm going to use... yes. We are going to use Litecoin instead of just pulling up a ton of them and being confusing. So we're going to use Litecoin. You don't need me to go through dozens and dozens. The concept is simple. I'm only using the daily chart here for Litecoin. This is the daily. Does this work on the hourly? Yeah. Does it work on smaller time frames? Yeah. But you got to know, so how do I know which one to use? Well, are you swing trading this for long term? Do you plan on trading this for several days or several weeks? Or are you trying to get in and out of this for a day or two? Or are you scalping this puppy like in an hour? You got to know that kind of thing to know what time frame. I'm just going to basically use the daily time frame right here for Litecoin, which we have on the screen. But this works for all time frames, depending on what style and type of trading you are doing. That simple. So we have all kinds of lines for support and resistance, and many times support becomes resistance, and many times resistance becomes support. And we're looking at a time frame from about October 2020 all the way to current time frame right now. I have some arrows drawn up here because we're going to kind of go through this. So this is the overall, this is the cone of wealth. This is what I call the cone of wealth that Litecoin has had since way down here. I had this drawn since literally way down here. So down here, you wouldn't really have this line probably too much until you had, here's one hit right here. So this line probably wouldn't exist right now until we got this bounce right here. And now you probably could start drawing this puppy. Look how effective, after two touches, look how effective this trend line is. Literally, I mean, almost a year out. How effective this trend line was in acting as support. Boom, 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 boom. Even this far ahead. Boom, boom. I mean, come on. Absolutely. If you cannot see the opportunity, then you're crazy. If you cannot see the opportunity of buying support and the power of buying support, and that's just the trend line. We haven't even talked about anything else. Now, also have up here, all these horizontal lines are based off of what? Price action, pricing for support and resistance based on these peaks and valleys. You have all these price actions. Some of them I pulled off the hourly, and some of them I pulled off the daily, but they're here nonetheless. So what I wanted to draw your attention to is where certain things kind of line up. So here's an example. Let's do right here. Let's do this one. Here's an example of price coming down to horizontal, old horizontal. This was old horizontal resistance becoming support. And almost tagging this line. You don't have this line, but you almost got that tag there. So this would have pretty much, remember, it's an area. So based on this line and this tag, this is close enough, and these lower wicks, you had a nice bounce off of that. Now, I want you to show you another place where you have double support. This time you don't really have a horizontal one, not much of one. You really have a emergence of the 15-day moving average. This is a 50-day moving average, and the confluence of the 50-day moving average and the trend line to the T. I mean, to the T. Look at that. And now look at this volume. Look at this. Look at this volume. Bang! This is literally a major play right here, a major gain right here. Two meeting up as support. Look at this engulfing candle. It doesn't have to be an engulfing candle, but an engulfing candle on rising volume, on rising volume is a good sign. And then you have a follow through. So based off this engulfing candle, you could have bought this next candle right here. Because remember, you wait for the highest probability is waiting for that to confirm. So we saw this bullish. So we have, look what we have lined up. 50-day moving average, support. Trend line, support. Bullish engulfing candle. You now have three things lined up. The next candle, you could have bought anywhere in this next candle and just rode this puppy to profits. Rode it to profits. I mean, fantastic. Absolutely fantastic. Here's an example of the trend line coming into play in the future, lining up with major support. It was resistance. It became support with one bounce, 2 bounces. You got 2 bounces. So you have this play right here. Major, awesome opportunity. What do you see in the next candle? Look at the next candle. You got a bullish engulfing candle right here. And then this play. I mean, it's unbelievable. Unbelievable. This right here is weak. This is weak sauce. It's weak sauce because there's not really a horizontal line there. This is not really giving me much to draw a horizontal line, to have horizontal price action support. There kind of is, but there really isn't. And the only thing you have here is a moving average. But look at this, and look at this volume. Yeah, that's a lower wick. That's a lower wick. But this is a much scarier play right here. It's a much scarier play because that is one huge descent. Much, much scarier play versus some of these other ones. These are much less scary. Here you have a confluence of a horizontal price action support blending with a moving average with an incredible lower wick rejection, getting you back up above on a bullish engulfing. Look at this. Bullish engulfing candle right there. I mean, 3 things lining up. You see what I mean about multiple things lining up? Look up here. Trend line, horizontal, and then it got back up above the moving average. So you could, oh my goodness. I mean, this is ridiculous. You have trend line support. You have sellers rejected. You now have a bullish engulfing with a major move off the moving average. You could have waited for that and entered here and made a ton of money. I mean, so that is an example. That is an example of putting things together to just buy support off of cones, trend lines, horizontal, add moving averages. I'm going to tell you a secret about moving averages. Are you ready? Some people pick the same 3 and stick with it and throw it on every chart. That's a mistake. Here's why. So some people are like, I'm going to do the 200-day, the 50-day, and I'm going to throw a short-term 12-dayer in there. Look, the key, that's great to have the 200-day on there. You know, it's great to have the 50-day on there. The key is to find the moving average that particular item likes to respect the most. And you can tell 50-day is a decent one. We get some respect here, some respect here. It respects this, it respects this, it respects here. But there's a lot that run right through the middle. Like if you pull up a moving average, it kind of runs through the middle of price action. Is that helpful? No. Find the moving average for that item. They're not all the same, man. It doesn't. If I put the same moving average, let's say I do a 12-dayer for Litecoin. I'm like, wow, that works out good with Litecoin. Then I try to throw that 12-dayer on XRP, and I'm like, ooh, XRP doesn't ever really respect the 12-day. Then go find the moving average it respects. I just gave you guys a massive secret. That is the secret of moving averages. That's right. It's finding the one that particular crypto, that particular stock, that particular item likes to respect. And so if I pull one up and it doesn't work at all for that item, it's not the right one. Pull up another one until you find the one that it respects. And then boom, now you have it. Leave it there. Play with that. Add that in. That's really the only class you need for moving averages. I mean, ultimately, it's that simple. It's that simple. Buy support in the uptrend, sell resistance in a downtrend. Because you're looking at this, you're like, whoa, yeah, I can do both. Look at this. I could have bought here. I could sell this. I could sell this. I could buy, sell. Guess what? Hindsight is 2020. It looks so good looking back. But when you're in an uptrend, it's very hard to predict the top, man. Like, how do you know it wasn't going to stop? It didn't stop here. It kept going. If you would have shorted this, if you would have shorted this right here, you'd have been screwed. Because it hardly dipped. Why? Because you're in an uptrend. It's dangerous to short that. Unless you know what you're doing or you're scalping it. You're doing a scalp trade. Very, very difficult. Just stick with trading the trend. And you will have a far greater percentage and chance of success. Man, I hope you liked it. I hope you liked it. I hope this helps. I hope you guys are putting stuff together. Until next time, baby. Here comes the boom.